Good morning, everyone, and welcome to my weekly podcast. It's all about US stocks and options, and it's presented by me, Jeff Fitzpatrick of the Extraordinary Investment Club. Let's get going. So the whole idea is to give people a view into what's going on in the world of stocks and options as we use them within the Extraordinary Investment Clubs. We'll look at things like market reports and watch lists, earnings coming out, training opportunities, and a lot more. Normally at this point, I give an analysis of stuff that's going on in terms of economic news coming out, official US government news. Last week, that was really important. We had news came out about inflation and the prospect of earlier interest rate reductions, and that moved the market in a positive direction. We could have been experiencing a pullback last week, but we didn't. However, there's nothing fantastic coming out that I expect this week will move the market. So instead, I want to talk to you about a book that I've just read. And it's Tony Robbins, The Holy Grail of Investing. I'm particularly talking about the first part of this book, where he looks at a couple of markets. And one was the energy market. And in that, he really persuaded me that there's not going to be a reduction in demand for fossil fuel generated energy for a long time to come. So much of the world hasn't yet got reliable energy, and they want it. The people in the third world want the facilities that everybody else has, and demand in the Western world is still going to grow tremendously. The amount of energy it takes, that's traditional energy, to build an electric vehicle, for example, is amazing. Robbins also looks at the property market and notes how throughout the world we've got huge office complexes which are now considered to be obsolete. You can pick them up for a relatively small amount of money, often far below the cost of building them in the first place. That industry has been affected by work from home, the pandemic, and a change in the culture. However, the market for residential property is very buoyant and expected to stay that way for a long time. So I'm going to be looking for opportunities to invest in the energy sector and also to continue investing in the residential property sector. But by the way, before I move on from this is the third book by Tony Robbins that's about money and investing. These are the first two. Money, Master the Game, that was the first, and then Unshakable. Money, Master the Game is a great book. It's a very big book, but well worth the read. Unshakable is a fantastic book and much shorter, and really everybody should look at it. Now, I don't agree with everything that's said within these pages. However, the majority of it is really good common sense. So have a read if you feel that's good for you. So next, company news. And we have news come in on Intel, the chip manufacturer. Well, the US are not really happy about being reliant so much on Taiwan for chips, and they're looking to have them manufactured in the US. They've given a grant to Intel of $19.5 billion, which Intel will then top up to $100 billion to build the world's largest chip factory in the US. I'm not sure what's going on with Nike this week. Their earnings came out and the expectations were beat. They're taking some really good corporate action to slim down their costs, but the share price dropped about 7%. It comes up really well on scores for quality and value and on the value line reports. It's amongst my picks for the week. And Paramount Pictures, they're continuing on their takeover discussions. There are several suitors involved, but I think they need to do something. Their share value, their market capitalization has reduced by $10 billion just about over the last 4 or 5 years. Then H&R Block. H&R Block are tax advisors. They help small businesses but they help a huge number of individuals to complete their annual tax returns. And the government, in the shape of the Federal Trade Commission, made some comments that criticise H&R Block regarding its tax-free filing services being misleading. H&R Block are fighting back. They're suing the government. Not sure that's always a good idea, but that's what they're doing. Earnings coming up in the next 2 weeks. We haven't got so many as usual, but these are the stocks that we regularly trade, and quite a number of our clubs are already in them that have earnings coming out this week and next week. And as always, just warn people, we don't try and anticipate earnings. We look and see what happens when they're announced, and if that gives us a great trading opportunity, then we might take it. So next, I look at market indices. And what I've done is produce an index starting on the 31st of March 2020. The significance of that date is that that was when the shares hit their low in the bear market that resulted from the pandemic and the lockdowns. So in each case, the index says that on that date, 31st of March 2020, these stocks represented a score of 100. So since then, first of all, TICN, they've actually gone up by 150% over the intervening time. It's nearly exactly 4 years. In the last week, that index increased by 2.52%. That wasn't the biggest increase, though. NASDAQ went up to 5.92 or by 5.92%. It still leaves it trailing TICN. The S&P index is up by 103% overall, and again did very well last week, 4.53% increase. The Dow Jones is a bit of a laggard. It is, of course, only 30 stocks. And those stocks went up since the pandemic by 79% and 3.52% last week. Now, of course, this is only about stock prices. On top of that, TICN have the income that they generate through selling puts and calls and getting into these stocks at a discount to start off with and getting out with a premium too. And we think that would add about 40% to the money that has been made by the stocks over that period. But however, with an extremely great sense of fair play, I won't put that money in. And I've been continuing work on my stock filter. This is how I look at the stocks to get them over the start line. If stocks don't get beyond each of these scores, then I don't look at them any further. If they do, I then look at the charts. And what I've been thinking over the last week or so, at least over the last few days, is that these filters might be a bit tight. I think particularly that's the case because we're in such a strong market at the moment. So many of the stocks are at the top or towards the top, towards their annual highs, their 52-week highs. And I think that quite a number of them will burst those and create new highs if they haven't already done so. So therefore, I'm being a little bit tight perhaps. So I'm considering moving some of these scores, but that'll be next week. For the moment, what I've got is, first of all, value line timeless score, where 1 is good and 5 is bad, and I'm looking at least a score of 2. Then we've got quality and value. I use the TICN scoring system to measure these, and I'm looking at quality, and I want to see a score of at least 35 out of 52 for that. And for value for money, I want to see a score of at least 40 out of 52. To look at the risk to reward ratio, I look at the difference between the 52-week high and the 52-week low. And I want to see how far down or how far up indeed the stock price is compared to the bottom and the top of that range. If it's more than about 35% up the scale, then I lose interest. I also look at the earnings announcements and see if any are due within the next 2 weeks. If that's the case, I put them on hold and I look at them once we get to or beyond earnings. I also have a bit of a thing about price. I try not to get too involved with stocks that are over $100. That's because the percentage that you get in terms of premiums from selling options tends to be lower. I also look at a minimum really of $5. Below that, we get a little bit too much volatility. However, there is an argument that says that the low-cost stocks can be very good. It's much easier for them to double in price than the higher price stocks. But for the moment, I'm a bit cautious below $5 as a share price. And I'm going to take a look now at how I filter the stocks once I get to these scores and beyond. Here we go. And this is where the magic happens. I'll perhaps blur that a bit so you can see it more easily. There we go. So we start with my 222 stocks that I monitor, and I just got them listed alphabetically at present. Then I put in the timeliness scores. There's about 15 to 20 of those change each week, and it's quite easy to identify which ones they are and to change them. I then have the quality and value scores from TICN. Now, some of the stocks don't have these scores. They've been introduced more recently and were at least a 3x4. That's 30 plus for quality and 40 plus for value when they came in. In some cases, and there's one at the top here, AAON, have now introduced my own version of the TICN scoring system. I've just updated it a bit, and those ones have highlighted in grey. And the column E is just a total of those. The next part of it is to look at the indicators on the charts. I've got quarterly, monthly, weekly, and daily indicators. And the percentage, that is the percentage that the stock is between the annual low and the annual high. So Aon, as example, is 93.62% of the way up from its annual low to its annual high. And for that, I think it might be a bit of a risk in terms of a risk to reward ratio. So the first thing I can do with this is just change the order to get all of the value line timeliness scores in the easiest order to work with. I simply highlight the whole lot. There we go. And go to data and sort. And at this point, I'm going to sort for column A, and I want the cell, I actually want to sort for column B. And I want to have the smallest at the top, the one scorers. Job done. So I've now got all of my timeless scores in order, ones and twos. There we go. And what I need to do next is to filter them again, this time for quality. So I'm going to highlight just the ones and twos. There we go. And then I'm going to sort the column for column C. So that's sort column C. And this time I want to have the largest at the top. There we go, largest. So I've got some 50s, can go down here, going to do the same again, highlight all of these that score at least 35, as long as I don't get beyond the score of 2 for timeliness from value line. And we don't, there we go. So that will do us. So we've got now about 50. And I'm going to do the same exercise again for value. So that's column D. And again, we want largest to smallest. There we go, job done. So let's see, that now gives us, going down to the 40 level, just about 24, 25 stocks. I could be a bit generous and include those 39s, but I won't for the moment. So then got across on the column J, some of these are nowhere near the bottom of their range. So I'm looking for no more than 35% in there. So I'll filter them again, this time on this percentage score. So all I do is highlight down to the value 40. Could take in the 39s, but I won't for the moment. And then sort on column J. Column J. There it is. And this time, I only want the smallest one. So smallest to largest, away we go. There we have it. I've actually now got it down to just 1, 2, 3, 4, 4 stocks that have passed those filters. You can see why I perhaps want to be a bit more forgiving. So what happens next? Well, now we've got to go and look at the charts. So here we have a daily chart. It happens to be BlackBerry. BlackBerry probably hasn't passed the filters, but the chart serves to what I want to show you here. So I actually divide this into zones from the bottom up. And I'm using mainly the stochastics. That's the indicator at the bottom in this area here. But I am looking at carefully the RSI and the MACD and the trends and also the 10 and 20-day exponential moving averages. So this stock has formed the magic V. It has passed across the 20 line on the stochastics, gone below it and back up. That's a really good, strong indicator. The MACD, the bars are going from winter towards summer. That's pretty good too. The RSI has got a slide down at the moment. The trend is up, and the moving averages may not be too far away from crossing over. So that's fantastic. That is below the 20, I call that zone 1. If it goes across the 20, forms a V, I call that zone 2. If it was further up, it's been in there a while, but still heading up, I call that zone 3. If it's across the top of the 80 line, and we'll see one in a minute, sitting there, then that is zone 5. If it forms a V and is coming down as it did here, to get below the stochastics 80 line again, that's zone 6. And then I get another zone if it's in the middle and still coming down. But that's only the daily chart. If you look at the movements between summer and winter, they're not long. So in the middle of January, this stock was in the middle of winter, fair enough. By the middle of February, it had got to the top. So a month from, then it started going down again. And generally, that's quite normal. We're seeing about a month's difference between the tops of summer and the bottoms in winter. So I look at also for some confirmation of that. And I start by looking at the quarterly chart. So here we have it. Each of the candlesticks on here is a quarter long. So I've got a lot of data. And you'll see that there's no confirmation here yet. This is in zone 1, no V going up, so no confirmation. Now that's not the big problem, because when a stock moves around, logically, we're going to see it turn first on the daily, then on the weekly, then on the monthly, and then on the quarterly. So no surprise. So let's pull in to the next, which is the monthly. Still underneath on the monthly too. Not good to go yet. At least it's not being confirmed by the monthly chart. So come in a bit closer to the weekly chart. And we still have it there. We haven't got a V. We haven't got any confirmation on this. We've got a little bit of upward movement on the MACD. And you might sort of see a bit of a trend forming on the candlesticks themselves. So what I'm looking for is some confirmation. Great if we can get on the weekly, even better if we can get it on the weekly and the monthly. Fantastic if we can get it on all 4. I haven't seen a stock yet that's given confirmation across all 4. So that's too tight a standard. So that's how I filter the stocks. Okay, so having done that, I get a very short list, as you saw, and these are the stocks that came up this week. At the top of the list, as it was last week, was Genpact. It's got a value line timely score of 1. It does well on the quality and value scores from TICN. It does well on the timing score, 42, for that's the scores that I've built up, and gets a good total. It's in a nice price area, 31.88, and the value line commentary is positive. Earnings are not due until the 9th of May, and we've got a good, reasonable annualized stock buying power usage on it. So I like it. The next one is Nike, NKE. And that looks good across here. It's a bit expensive at $93.86. And we think it might get a little bit lower yet, perhaps $90. And we also want to get a bit of confirmation on it. We're getting down the quality line here now. We've got Sealed Air Corporation, SEE. And they beat their last earnings expectation. And it's looking good in the longer term, but we want these scores to improve a little bit. The timing score that I've come up with at 25 isn't quite there yet, but it's one that I'm watching carefully. And then that was my dance list. I also have a kill list. And really, there are so many stocks at the top of their range at present that I would have a very, very long list. I've just picked out some what we might call lowlights for you. These are stocks that are scoring very low. TSM, CTRN, KFY, NSIT, CMCSA, MDT, and FDS. They are not bad stocks. They're just not in the right time at the moment. In addition, there are stocks that I'm avoiding. These are stocks that have been hitting a bit of choppy water that I'm just holding off on. SSRM, which you know about with their mining problems, EBS, which had a huge fall in its price, Forest Research, which seems to be struggling a bit. That one is, I'm not 100% certain about putting it in here yet. And Big Lots, the discount store shop, which lost a lot of ground. And then HA, simply because it's standing very still as a result of potential takeover activity, in which case it may be taken over. And next, I thought I'd just tell you about an interesting trade that I did late last week, and this was on gold. So one of the clubs has had gold shares, Barrick Mining, for quite a long time and paid $26 for them, although they got a premium of $4.91 by selling a put to get in. Still, that at the present price of $15.52 is not a happy situation. So we have been selling calls, and a call was sold that expired on Friday, the 22nd of March. Now, that is not the normal expiration date. The date was chosen because quite often, as in this case, the weekly options have 50-cent or smaller intervals between strike prices than are the monthly ones. So they went and sold a $15.50 strike price call, and that call was for April. It's going to expire shortly, and the current price of $15.52 means that the stock will be taken off them, leaving them with a loss. So what have we done? We want to create an income on this stock to get it into the black. So therefore, we bought back the existing promise for 17 cents and sold a new one and went for a higher strike price, $16, and got 83 cents for it. So the new exposure is now $19.19. That's down 66 cents. And we've moved the danger of losing the stock from $15.50 to $16. If we need to, if the stock does go up again, we could actually repeat this and buy back that promise and sell a new one. So that's called rolling forward and up a call. Quite neat. Just to remind everybody, we've got the training coming up at the Sofitel Terminal 5 Heathrow, Friday, 21st of June in the evening, 5 till 9, and then the full Saturday and Sunday following that. Now, this will be a fantastic event. The amount of work and research that's going on at present means there's bound to be a lot of new stuff in this. On the Friday evening, we'll look at live trading. On the Saturday, we'll go into some depth on the TIC and scoring system, and also we'll be looking at some examples. And we'll also be beginning to look at the sale of puts and calls. On the Sunday, we get into the new stuff. We get into the research, we get into the latest ideas, and we get into looking at how we get out of sticky situations, fancy footwork, as I often call it. So if you can possibly join us, do. You can book at myinvestmentclub.co.uk. I hope to see you there. And just to remind you that my book is out there. It's out there in Audible, it can be listened to. You can get it as a paperback or you can get it as an ebook. It's available on Amazon and Audible, but it's also on 50 other platforms. It has done very well, and I've only had really good feedback on it. People tell me it's an easy read. Thanks for listening. I'll talk to you next week.